market slipped on Wednesday as investors monitor developments in the United States after lawmakers launched an impeachment inquiry into President Donald Trump. The U.S. president allegedly pressured Zelensky to investigate Democratic presidential hopeful Joe Biden's family. Even if Democrats eventually impeach Trump, the Republican-held Senate may never find him guilty. However, the initial market reaction to the impeachment inquiry was quite aggressive. On the trade front, Trump said that he will not accept a bad deal with Beijing ahead of negotiations between the two world's largest economies set to take place in the coming weeks. In turn, Chinese Foreign Minister and State Councilor Wang Yi said Beijing expects Washington to remove all unreasonable restrictions. As a result, the Shanghai Composite was down 1% to about 2,955.43. Hong Kong Hang Seng Index fell 1.27%. In Japan, the Nikkei 225 closed 0.36% lower at 22,020.15. Over in South Korea, the Kospi shed 1.32% to close at 2,073.39. Australia's S&P ASX 200 ended its trading day 0.57% lower at 6,710.20. The MSCI Asia ex-Japan Index trades 0.9% lower, and in Europe, the Pan-European Stock 600 was 0.7% lower, with technology stocks leading losses on a 1.2% decline as almost every sector and all major bourses traded in the red as market focus was largely attuned to news of a bid from Democrats in the U.S. House of Representatives to impeach Trump. Meanwhile, Brexit uncertainty continued to cloud markets in the region. UK Prime Minister Boris Johnson was dealt a serious defeat after Britain's Supreme Court ruled that his decision to suspend Parliament weeks ahead of Brexit was unlawful. Johnson disagreed with the verdict and said that he would take the UK out of the EU by an October 31st deadline. He has faced increased calls from lawmakers to resign following the ruling. However, in the US, as investor sentiment improved, major indexes rose on Wednesday. The Dow jumped 162.94 points, or 0.6%, to 26,970.71. The S&P 500 climbed 0.6% to 2,984.87. The Nasdaq Composite advanced 1.1% to close at 8,077.38. Stocks rose because Trump said to reporters that a U.S.-China trade deal could come sooner than expected. Meanwhile, a memo showed Trump asked Ukrainian President Volodymyr Zelensky if he could look into former Vice President Joe Biden and his son. However, the note did not explicitly show a quid pro quo between the two leaders, giving investors some relief. In currencies, the dollar rose strongly across the board, with the USD index extending gains to May 2017 highs amid a recovery in the U.S. Treasury yields. U.S. economic data was limited to August new home sales that had a muted impact on the majors. The euro-US dollar dipped below 1.0940 and remains below 1.10 on Thursday, as recovery attempts were shallow and the broader picture continues to point the bearish sentiment surrounding the common currency. Today, the pair may trim losses should the U.S. GDP data disappoint and fuel a downside correction in the greenback across the board. As for commodities, Brent crude dropped on Wednesday as Saudi Arabia said it's ahead of schedule to make the necessary repairs to the Abqaiq facility. In addition, Trump soured hopes of a breakthrough in the trade war when the two countries resume negotiations next month. The U.S. leader also made some scathing remarks about Iran, but left a small door open for a path to de-escalation, which added to the selling pressure on the oil market. As a result, Brent dipped briefly to the $60.30 area, but managed to trim its intraday losses later and finish marginally above $61.50. Despite the recovery from lows, the $60 handle remains at risk in the short term. That is all for today. Thank you so much for watching, and please click subscribe to always be in touch with the latest market news.